everybody's assuming that quarter-point hike's going to happen. I believe you also believe it's going to happen. But what are you expecting from Jay Powell's press conference? Is it going to be a hawkish tone or maybe something a bit different than many people are expecting?
You know, I think Jay Powell is going to keep his options open. We have a long time before the next Fed meeting. The Fed doesn't make another decision until September 20th. And so we have 2 jobs reports, 2 big CPI reports, just a lot of data between now and then. So from their perspective, they have every reason to really sort of play this as sort of loose as they can, try and make sure they sort of don't commit too hard to any individual path.
So they want to stay loose. That sounds very different from what we've heard from the Fed so far. In your mind, you think they want to kind of keep it pretty loose. We've heard from Austin Goolsbee right here on CNBC and other Fed speakers that we should expect 2 hikes this year, including this one that's expected tomorrow. Do you believe that we are going to see that second hike?
You know, I think it's an open question at this stage, and anyone who says too confidently one way or the other sort of needs to be a little more data dependent. I think it's really going to hinge on what happens in these next couple of inflation reports. If, as economists are predicting, we keep seeing a steady downdrift in inflation, if things continue to just cool off and cool off, I think that there's probably a solid case that this could be the last hike. And you're hearing a lot of places like Goldman Sachs call for that. If, on the other hand, inflation isn't sort of cooling down along that steady path, I think that, you know, they've clearly signaled that they're willing to do more.
So how do earnings play into this? Does the Fed watch the earnings, specifically the bank earnings? We were so concerned, even the Fed was concerned about the disruption in banking, the tightening of credit. It doesn't appear that narrative is playing out as many people expected back in March after SVB.
Yeah, I think that actually does play a big role here. And so I think what the Fed had anticipated after the SVB blow up was that it was going to do some of their work for them, so that credit conditions were going to tighten so much that the Fed wasn't going to have to do as much work to slow down the economy. And what we've seen instead is really that banks are still lending. Things are tighter, but they're only basically as much tighter as they were going into SVB. Really what we're seeing there is the impact of the Fed's rate increases last year. And so I do think that probably argues that the Fed might need to do a little bit more to slow down the economy. On the other side of that ledger, though, we are finally seeing the slowdown in hiring that we were expecting. It's not quite as quick as we were expecting, but it's slowly happening. And we are finally seeing that downdrift in inflation that has been, long awaited, but not realized up until this point. And so I think those 2 things combine to make their job a little easier, hopefully. But I think we'll have to balance those things against each other.
So obviously 3% is not 2%, their target. But as you mentioned, the labor market is beginning to soften, and we are kind of seeing the consumer appearing to be stretched to its limit. Are those, again, things that the Fed is going to consider when making this decision and maybe another one this year?
Yeah, well, so I think importantly, as you said, 3% is not 2%. 3% is where headline CPI is right now. I think the magic number for the Fed is 4.8%, which is where core CPI is right now. That number that strips out food and fuel, which are a little bit volatile. They're looking at that sort of more steady state inflation number, and it's quite a bit higher. So I think that's important. Clearly, the fact that consumer spending is pulling back a little bit is relevant to them, but it's pulling back a little bit. We're still seeing a pretty robust consumer. Like, look at the Taylor Swift concert. People are still willing to spend some money, I think.
Yeah, look at an airport right now. People are definitely spending a lot of money.